Good evening everyone, Santil here. Can everyone able to see my screen and hear my voice clearly? Good evening Aditya, Mr. Shah, Rekha, good evening everyone. Okay, so now as per the tech support team, many of our students could not able to view the video. So let's see that first. Maybe I have told in the introduction session itself, but still we will see that once more time. Once more we'll see that. So visit StockPhoenix page, stockphoenix.com. So on the top of the page there is a login, and use with your registered mobile ID and password or email ID and password. Log into the dashboard and your name will appear here. Click on this and you can see there is a, just a minute. Okay, so there is a dashboard, and here I'll come Mr. Shah. You can see there is StockPhoenix webinar 18. For you only these three tabs will be available, and one is StockPhoenix webinar 18 clarification class and refresher class. So just a minute, Mr. Bilin, my audio is very clear. You have to check your internet connection. Mic is, there is no default, there is no settings for mic to change the volume. So I think my internet connection is perfect. So you have to either increase your internet connection, so your volume in your system, or else in the GoToWebinar portal. I think in GoToWebinar portal also there is no option to control the volume. You have to check in your system. Hi Prashant, welcome. I'll come back to your question, Mr. Shah. So coming back, so click on this webinar 18 and you can see the video here. Just click here, it will start playing. If you want to enlarge here. So this is how it works. So and give escape. So this is how it works. Clear. So and what all the documents we are studying now, it will be uploaded here. So webinar course 18 money management, and after that you can see the images. So far the images is not available because we have not taken any diagram for explanation. So pictures for explanation, you can see that here. Clear. So let's start. Question is Mr. Agam Shah. Agam Shah, that's your name, right? So I should start pronouncing right. So that is the one important thing. I have a question from yesterday's session. You said we have to select stock from different sectors. There are almost 2000 stocks from different sector. How to select, okay, in a particular sector? So the thing is, like, we have a semi-automated screeners for all the trade setup which we are going to learn. We have a semi-automated screeners for all the trade setup we are going to learn. So it will, out of the 2000 stocks, it will screen you 15-20 stocks, and after selecting the stock you check whether this is the right sector to invest. For example, already you have invested in petroleum, steel, private bank, and next day you are screening. If you are getting a stock again from a private bank, even if it is as per the trade setup, you have to reject that because already you are holding the position. Is that clear for everyone? And for example, if you are getting a next stock from a public sector bank, you can select that, you can start investing. Are we clear? The stock selection and stock rejection. Rejection is very important because we have to reject 2000, or almost we have to reject 1995 stocks we have to reject. That means it's not that we are going to see all the stocks. We will select 15-20 stocks from the pre-defined screener and we will start selecting the stocks. Clear? So now let's get into the today's session. So let me see how many students have joined. So almost full attendance is there. Varsha went online, and who is we'll start in 2-3 minutes. Okay, let's start. So today it's going to be some interesting session. That is like we are going to learn about Nifty. That is the basics of stock market. So the basics of stock market we are going to learn, and we are going to learn how market is giving an opportunity to trade. How the stock market is giving an opportunity to trade. How many days in a year it is giving an opportunity to trade. Absolutely, it is not required to trade for 300 days or 250 days. So that is not required. But still, how can we avoid ourselves in trading in a high risk market? So we are going to see all those things. First, let's learn about Nifty. Nifty is a composite of top 50 companies. Okay, Nifty is a composite of top 50 companies. Buying one share in all 50 companies is more or less equal to buying one lot of Nifty. I'll come to this place later. Buying one share in all top 50 companies is more or less equal to buying one lot Nifty, because that is the Nifty is the aggregate of top 50 companies, and it is like the face of our economy. So Indian economy is been represented by Nifty. So based on Nifty crash and Nifty rally, we evaluate that Indian market is good, Indian market is bad. So that is how we define with Nifty. So in India we have two index which we can trade, that is Nifty and Bank Nifty. Mostly we will take how to evaluate, we take as a Nifty because that is the face of the index. Bank Nifty is a composite of private and public banks. So that we will see later. So what is Nifty? When I tell market is nothing but we tell Nifty as a market. Okay. So that is how is overall we are looking on to the market, that is Nifty. Next, what is a share? Share or stock or script. So these are the different terminologies we use to represent a company's share, a company's stock. So that is DLF, Reliance, ICICI Bank, Yes Bank, Kotak, VDL, Vedanta Limited, or Juari Cements. So whatever may be. So these are all called as stocks or script or shares. Clear? So we will come to this later. Indian stock market, major exchanges: NSE, National Stock Exchange, Bombay Stock Exchange, and index for NSE is Nifty, average of top 50 companies, and Bombay Stock Exchange, Sensex, top average of 30 companies. And you can trade in Nifty, you cannot able to trade in Sensex. It is just for a evaluation purpose. And Nifty, we can trade in Nifty future on the market movement, we can trade in Nifty. Market timings 9:15 to 3:30 p.m, 9:15 to 3:30 p.m, no change. We have one more exchange, MCX, that is commodities, where we trade in gold, crude, silver, all the precious metals, base metals, energy, agri products, everything is getting traded in commodities. And time is 9 a.m. to 11:30 p.m. or 11:55 p.m. according to winter and summer, the market closing time changes. So any doubt till here? So a short outlook on Indian market, and what is Nifty, that much we have seen. So we have to see what is the composite of Nifty, what is the companies which is listed in Nifty, we are going to see now. So any doubts still here? If you don't have any doubt, no need to reply or no need to put yes, no, fine. If you have any doubts, you can ask your questions. Is the speed okay, or still I have to slow down? Everyone could understand, or still I have to slow down? For this you can reply. In case speed is okay, right? So I'll not cover very fast. I want everyone to understand. If there is 50 members, all the 50 members has to understand. That is the only concept. Clear? Thank you. Yeah, bit slow. Yes, Aditya, I'll take it. Thank you. So now, so these are the links which is being available to check the references. Okay, whatever we are going to learn today, these are the links. You can just copy from the Excel and you can go and see that after the sessions. This is very, very important. Whatever I am taking here, you have to go back and see each and every link, whether did you understood that, or in case if you have any doubts in that link, when you see something new, you can come back and ask the question. Yes, Mr. Sudhindra Bath, the Excel is available in this dashboard. The Excel is available in this dashboard. It is only for you. So don't publish this Excel in Telegram, because it may shared, it may be shared, someone will forward. So it's a material of Stock Phoenix. It's the property of me and you. Okay. So this is the place you can see the Excel. Once you click on this, the Excel will get downloaded and you can start using this. You can take this links from this Excel. So coming back, so these are the small blog where you can see the Nifty index. So the components of the Nifty. So that is which all companies is there, all those things we can see. So now you can see here, this is the latest update as per March 29, 2019. HPCL, Hindustan Petroleum, has been removed from the Nifty and Britannia has been added to Nifty. One company is removed and one company is added. So if in the case 5 companies are removed, again 5 companies will be added, because they have kept 50 companies as an average for Nifty. So now when you see this Nifty, these are the shares which the industries are holding, So what is the use of understanding this? Okay, let the company hold anything. Let HDFC be 10% or 20% or 30%. What is the use of that? So we need to understand what is the contribution of this which company, so that will give a impact in Nifty movement. That is what we are trying to understand now. So financial services and information technology contribute 52%. That means, for example, if there is a common news from the government which impacts, which is a negative news, for example, which is a negative news for financial services and also for information technology, there is lot of chances where Nifty can go down. So that is the inference of the negative news. So market will start going down. And after that, you can see here financial services bifurcation, 37 or 38% to round off, and IT is approximately 14.5%. 5 pharmaceutical companies, and cigarette company is only one, which is the average percentage is 6%. Do you think someone will start smoking, stop smoking the next day morning? It is not going to happen. So that is the reason ITC alone is holding 6% of the Nifty weightage. So when we come back to here, let's see the company one by one. You can see here automobile. In automobile, the complete industry was down for last few months. The complete industry, the complete automobile sector was down for the last few months, but still Nifty was not giving a very, because of this there was a no big impact in Nifty. The reason is, you can see here 0.86%, 0.69%, 0.6%, 1.27, 1.87, 0.82. So put together the average will be around 7 to 8%. So I don't think it will be more than 7 to 8%. Is not there. Just a minute. It's 6.1%. So the average is 6.1%. So if there is a big crash in this, if there is a very big negative news in this complete industry also, Nifty will have a small impact only. So that is the inference by understanding the sectorial wise participation on Nifty. Next, financial services. So very important sector. So Axis Bank, HDFC, you can see here HDFC is having 10.53%, and you can see ICICI, IndusInd, Kotak, State Bank, Yes Bank, Bajaj Finance, Bajaj Finserv. Again you can see here again HDFC Group, that is HDFC Bank and HDFC Limited. These two companies alone put together holding a percentage of 17%, approximately 17.5%, where somewhere, say like for example, if there is a negative news or if there is a positive news. See, recently we had some issues with Yes Bank CEO, right? The complete stock crashed from 300 to 40 rupees, but still Nifty was not affected because the weightage is very less. But if the same thing happened with HDFC groups, that is in HDFC Bank and HDFC Limited, market will have a significant impact if there is a good news or else even a bad news. Next, Indiabulls Housing Finance Limited. You can see here again the stock is substantially crashed, but there is no big impact in Nifty on that particular day or that particular series. Next, cement industry 0.75, 1.2 Ultratech, cigarettes 5.46, and IT sector again. IT is having a good weightage, that is around how much? 14.46%. So have you ever seen when the market is completely down? If you might not have seen, you notice when Nifty is completely crashed on some days, IT industry will have some positive trends, that which we have seen out of the instances which happened. So that is due to dollar inflation. So most of the companies are getting projects from overseas. So what happens when Indian currency becomes weak, dollar becomes strong, their their payments are substantially, they'll be having a good growth, they'll be getting more profits on that money difference. Next, consumer goods. So these are the things, so goes on. And one more important thing to notice, Reliance Industries. Reliance Industries. All will be same, where the companies are having small shares, there will not be big impact. You can see here again Reliance Industries 10%. That means this company has the potential to support Nifty index and also to slip down to crash down the Nifty index. So this is the overall inference of the Nifty weightage. Clear? Next. So how to see the sectorial positives or negatives? So what you can do is you can go to Google. Search for NSE Nifty sectorial and you can see here. So this link, I think it will be available here. You can see here, it's available here. So let me paste it. So these are the sectors we can see here, which sector is positive and which sector is negative. Say like for example, Nifty 50 is positive. So Nifty 50 in the sense whatever we are telling Nifty market, so that is called as Nifty 50. Nifty 50 is positive, say like 1.5%, 2% positive. Nifty auto is negative. Don't go and buy some stocks in that particular sector because this particular sector itself is negative. So what happens when sector is weak, that impact will be there in that particular segment also. However, it is not confirmed. If the stock is having a strong news or strong open interest or buyers or sellers based upon the demand and supply, stock will move. Yes, that will happen, but it's an overall trend to avoid many wrong stocks. Are we clear? Any doubts? So you can see here, out of Nifty 50, you can see here. After that, you can see Nifty Bank, Auto, Fin Services, FMCG, IT, Media, Metal, Pharma, PSU Bank, Private Bank, Realty. So these are the things which is to be noted. So it's not so important, but yes, before making a positions, as I told you, if you are going to trade 5 to 8 positions in 5 to 8 trades in a month, you can have good time to watch all those things and do your trade. That is quality trades. Are we clear? Any doubts still here? Maybe I might have left many things, but I believe this is important. This is sufficient for the current course curriculum, because learning about very vast in stock market is not required, because it will dilute your concentration. That is what we have seen for the same 17 batches. This is what is the curriculum and they are successful. So any doubts still here? Okay. Nifty 50 and Nifty 100, Nifty 500 is different. Yes, Nifty 50 in the sense Nifty, this 50 stocks will come. When you see Nifty 100, you can see the additional stocks which is listed in this Nifty, and after that Nifty 200 again it will come, all the 500 stocks will be listed. So that is how the stocks will be added on the based on the priority. Clear? So next is PE ratio. Okay, before seeing PE ratio, we will see the interrelation of global market. Can we trade on Nifty 100 like Nifty 50? No, sir, it is not possible. You can trade only on Nifty 50. After that, you have to start trading in individual stocks. You can trade in Nifty 50, Nifty IT, Nifty Bank Nifty, you can trade. So these are the major indexes, and after that, you have to trade in individual stocks. That is Nifty 100 and Nifty 500 is just to evaluate the average. So next, okay, let's go by order itself. Now, Nifty price to earning ratio. See, this P ratio in the sense price to earning ratio. Okay, so if you want to know more detail on P ratio, you can Google it or you can refer Investopedia for understanding Nifty P ratio. I'll teach you how to evaluate or how this P ratio is used. So that much is required as of now. So PE ratio in the sense price to earned ratio, that means is this stock or index is worth to invest in this particular time. That is the short definition. If I am going to buy ICICI Bank, while seeing the PE ratio, we can able to understand, is it worth to invest in this particular stock? Number one. Number two, will this stock go above this level based on the historical data? So that is what is we can understand. So how to check Nifty PE ratio for current day? Google NSE Nifty PE ratio. So always try to take the ratios or the values from NSE site itself so that to avoid errors. The reason is, for example, I may also update these data in Stockphoenix, but in case my backend got stuck up or my developer didn't update, any bug is there, the updates will not happen. Same is applicable to different websites. Instead of seeing in third-party websites, first refer NSE website. If you don't find sufficient information, then go and refer the third-party website. Nifty 50. So see for Nifty 50 alone. So let's see from November 1st to till date. I need only PE ratio. You can see here the PE ratio is for 1st November 27.47 and 11th November 27.52. Like this, it differs on a daily basis. So what is the use of this, or how to calculate, how to evaluate? Let's see. PE analysis. So it's a separate sheet. This sheet also I'll update you at the end of the session. So this sheet I'll give a description of this sheet. So this is the data sheet of Nifty. Data of Nifty has been captured from 4th Jan 2010 to 27th September 2019. That is as good as 10 years, as good as 9 years or 10 years data we have captured. So let me close and open it again so that I can able to do any kind of filtrations, editings I can able to do here. Let me explain this data sheet first. The headers, date in the sense current date, open in the sense open price of the Nifty on this particular day, which price Nifty opened on that particular day, high, what was that particular day's high, what was that particular day's low, what was that particular day's close, which is called as OHLC, open, high, low, close. Next, this is Nifty futures data. It's not Nifty spots data, Nifty future data. So who don't know about Nifty spot, ignore it. I'll explain in the coming classes. So what is the number of shares traded, and what is turnover, and what is variation? Variation in the sense, what is the difference between high and low? For example, high is 12 rupees, low is 7 rupees. What is the difference? Can someone tell? I just need the difference, not in numeric. It should be in numerics. Yes, 5 rupees. So high is okay. Let's come like this. High is 7, low is 3. Again, it is 4. So this is the difference. So this is what we are capturing. This is the data we are capturing here. The variation. So what the difference between the high and low? That means market opened here and it went high till here, came down slowly and sustained here for some time, and again went down till here and closed here. So low, high, open, close. So we are ignoring this data. Sorry, we are ignoring this data. Open and close we are ignoring. We are taking the values are high and low. Values of high and low. Clear? So next, variation. Sorry, variation we have seen. Range. Range in the sense, if you see here, there are different numerics 16, 20, 21, 22. So based on this, calculating 10 years data is very difficult. So what I have done here is I have done a grouping for this point movement. One day if it is 21, then it will come in between 0 to 25. Next day it is 121 points, so it will come in between 100 to 25. Like this, what was the variant we have captured in different data format: 0 to 25, 25 to 50, 0, you can see here 0 to 25, 25 to 50, 50 to 75, 75 to 100, 100 to 125. Like this, in every 25 points we have captured. Yeah, these are datas of daily data, not monthly data, daily data. Yes, data captured based on variation. Okay. Next, this is PE ratio. This is the PE ratio. That is all everyday PE ratio. At the end of the day, whatever the PE ratio has come, we have captured here. Clear? So close I have explained you. Forget about day, month, year. Forget about these things. This is not required. Why September 20 is given true? Let me check, sir. There will be some mistake. There will be some mistake. Okay, let's ignore that. Minor, it's maybe some data mistake. We will check, or something might not have been updated. Variation. Okay, variation is more than 500 points. Variation is more than 500 points. That means we have done a grouping less than. No, it's not because of the important day. See here we have captured the data. We have done the grouping only till 500 points. Above 500 we have not done a grouping. So that's the reason it is coming as a some remarks is coming. Okay. So next. So with this, how we are going to learn? With this, what is the data analysis we can do? You can see here P ratio. If the P ratio of Nifty only, this is for Nifty only, and when you do the evaluation for Nifty, that is for overall market trend. That is for overall market trend. Next, P ratio. So if the P ratio is in between 22 to 24, if the P ratio is in between 22 to 24, that is based on the current market trend. That is based on the current and in the last 2 years market trend. We have arrived this solution, that is 22 to 24. It is the best time to buy or investment. It is the best time to buy or do your investment in stocks, or buy a 4-month Nifty future and hold it for positionally. If the P ratio is in between 28 to 30, it is the time to exit. That means if you have already bought one stock at 100 rupees and now it is 180 rupees, and when you see the Nifty ratio as 28 to 30, then overall market trend is telling you to book your profits and wait for fresh investment. So when the when the when the Nifty ratio is in between 28 to 30, it is time to exit, or do not make fresh investment, or exit and liquidate is same, liquidate your profits, close your positions in profits. Who didn't understand this place? Let's see an example there. Let's see an example there. Before that, any doubts you can ask here. Can you give an example? Yes, we are going to see the example. So this place, when the P ratio is 22 to 24, market will move up in a short time. Move up in a short time. That means it will give a rally. When P ratio is in between 28 to 30, we can expect a crash. Clear? So now I got few questions. I'll answer that and we'll get into examples. Examples I'm going to give that. This is only for Nifty. For stock, you have to do your own analysis. For stock, you have to do your own analysis. 24 to 28, you can invest. If the stock value is less, you can invest. But this is the time to turn around. 22 to 24, that is like an indication. So that you can invest your stocks. You can invest in stocks. Figures are indicators. Yes, these figures are indicators. Whether PE remain below 22 also. Yes, PE will go below 22 also. But in the current trend stock market, PE is not expected to go below 22. It may also go. It may go even up to 16. But we are not sure. With the basic recent analysis we have arrived this solution. So considering now P ratio, we are close to liquidate and wait. Yes, that is right, sir. P ratio will not change in live market. You will get the data only at the end of the day. If you see in live market, you will see only yesterday's P ratio. Any stock which is part of Nifty shall also apply. No, P ratio for stock will have a different. But now how to correlate this view with stocks? So that is very important, right? That is important, right? I'll come, Vijay. I'll come for the explanation. How do we calculate a P day for a month or day? Sir, calculation, seriously, I don't know. I know where it is available. I showed you. That much is sufficient, I believe. So how P is calculated? You have to ask CA guy. For private discussion, we'll discuss post class. Okay. Quality stocks with high value, it's difficult to get PE between 22 to 24. So stocks and Nifty cannot be taken for investment. That is right. There is. I'll come. Let me finish this. So coming to this analysis, with this analysis, we have to pick a stock which is having a downtrend and about to reverse. So for example, what we can do is, let's come up to this short listing. Say like Nifty. '24 stocks passing technicals to buy plus we have to see one more parameter. Check fundamentals. See only one thing, there is no debts and defaults. Debts can be easily seen in the financial sheet, and defaults in the sense, for example, for a bank, NPA is a default. Or say for example, for a real estate company, if they are selling a big asset just to compensate the balance sheet, that is a default. You understood, right? So this different types of fundamental analysis are there, that we will give you a stockage application webinar. In that you can easily, by seeing the image itself, like a charting image itself, you can able to understand a company which is in a good position, or the company has defaulted in the previous financial year or in the current financial year. Clear? Coming back to the live analysis. So now coming back to the analysis, you can see here. Now what I'll do is, let's not go and search for 16 and 20, 16 and 18, because that is long time back, which is not in the current trend. Let's do the analysis where it was 22 to 24. So let's see between, so again let's not go by January 10th, because at that time 16 was low and 24 was high. Okay, January 2010, 16 was low and 23 was high. So let's do last 10 10 events where it has given a reversals. So now what I'll do is, we need a chart. Okay, let's open this Nifty. So I'm opening a Nifty chart. Nifty chart. I'll open a monthly chart, even that is a little bit high. I'll open a weekly chart so that we can able to understand easily. See whether it has did it reversed. So let's see this place. So if we see here 16th June 2017. Okay, 16th June 2017. After that, it has not reached 24 levels. That means the cycle happens very rarely. So we can see here June 16th June 2017. So we have to go to approximately June 2017. Let's go and see. So I think I have to change to, okay. So it will take a little bit time. So because let's do the analysis properly. 16, 17. You can see here, this is the place. Am I right? Yes. June 2017. So this is the place which we have seen a downtrend. Let me check the dates again. Last time which we have seen is, okay, that's wrong. 24, we should not see 24, we should have seen 22. We have to take the lowest value. Yeah. Thank you, Madhu. I didn't know that. It was in 5-minute chart. You can see here 27th August 2015. 27th August 2015. So we have to little bit go back. You can see here completely market was crashed. So 27th, so that particular time, let's not go by exact date, that particular week, 27th August 2015, we can take that particular month. You can see here Nifty was completely crashed and it has given an indication for reversal. You can see here from approximately, let's take 7,700, it has given a reversal up to 8,600 points. It has given a reversal. So 600 points, in the sense stocks might have appreciated by 15 to 20% in this short market move. That is from August to August to October, November, it might have given 20% appreciation where the stock has given a pass out of investment, pass out for investment. So next, let's see one more instance. So after that, let's see where it was less, 22nd from after 2015. Let's see when it was 22. Yes, you can see here 2nd January 2017. You can see here again this particular period, second, this is the place it has reached in that particular area. From here you can see it is a complete reversal. So this particular rally happened full stretch, it happened a rally completely, there was a rally. So like this, when we start watching this P analysis on a periodical basis, no need to check on a daily basis, on a periodical basis. So how to check, when to check this P analysis? When market is completely crashed, when the market is completely crashed. So considering recent areas, considering the recent areas, can we consider this area is completely crashed? So like August 2019, let's check. I think data should be there. So it is 27 because the Nifty PE ratio went up to 30 levels. It went up to 30 levels. So that's the reason when it came 27, when the market was crashed by 1000 points also, the PE ratio could not able to come down because it was trading at 30, 29. You can see here 29.9 it was trading. From here, when the market was crashed by 1200 points, the P ratio came up to 27 levels. So why after this much crash P ratio didn't come? Because that is the area where it is giving a fundamental explanation, a fundamental opportunity that the overall market is crashed, so that is the right time to invest. So no other option, we have to wait till it reaches 24. So now another one crash or another 1000 points down, I think P ratio will again reach back to the level. Don't invest immediately when it reaches 24, because when it reaches 24, it is reaching the danger zone. After that, it will go further down, it will sustain for some time. After that, it will start reversing. Are we clear? Same analysis like this, you have to take a same set of data for stocks and you have to do your analysis. So it is as per our infrastructure, it is very difficult to do this P analysis for all the stocks. So it is left up to you. This data format we will provide you. You can shift, you can change this data format to stocks and you can do your own analysis. Rekha, what is the manner exactly this P ratio is useful? Does it mean P ratio of Nifty shows 22 to 24? We can buy Nifty future of 2 months ahead. Yes, you can buy Nifty futures of 2 months ahead. Again, stop loss is required. Number 2, you can invest in stocks rather than investing in FD or RD. Comparatively, that particular moment will give you good profits. Are we clear? Next, where can we get historical data of OHLC? Very simple, sir. You put Nifty historical data. Nifty historical data and get into the Nifty NSE site itself. You can just you can get the historical data. Download into Excel, and uh, you can just, you have to do the copy pasting this Excel workbook, you have to do it manually. So now when you want to do this here, not required of doing this entire work, from here you can start attaching. How can I get the data for stocks like this? Same, it is available, sir. You can see here it's 6.23, and I'm not sure, it should be available in NSE itself. The data should be available in NSE itself. We'll check and I'll update you. So far we have not done for stocks. You can see historical data. So historical data is available here. So you can see this, and let me see, the PE ratio is not available. Yes. I answered this question. Where can we get the historical data of OHLC? I answered. Where can we get the P ratio of stocks? I told you, you have to check. I'll check and update you. How can I get data for stocks like this? Mohit, I have to check and update. Can we fix stop loss for Nifty? Yes, you can keep a stop loss for Nifty as a recent low. That means, for example, you are identifying a trend. At this place you are seeing, Nifty at 22 levels, 22.05 levels. You are buying Nifty here, you are buying a Nifty here. Then you have to keep your stop loss below this level. You have to keep your stop loss, or somewhere you can able to manage the stop loss. Say like this place will be very high, 11,065, 10,064. 300 points is very big, so you can keep a stop loss of 75 to 100 points. Since it is going to be a positional trade, you can keep a stop loss of 75 to 100 points with a target of 300 to 500 points. Are we clear, Vinod? You can keep the swing low. For example, if you might have entered in this kind of place, you can keep a stop loss at this place. But if you might have entered at this place, so stop loss is very big. At that place, no point of keeping 400 points as a stop loss. So keep the stop loss as a 75 to 100 points, since the target is very high. Current PE is more than 27. Time to liquidate. What to expect in near future? We have to look for a downtrend. If the downtrend is coming, see now listen carefully. Last time when Nifty was here, it was 30, right? Again Nifty is here, now it is 27. Why? It should be 30 here, right? Again, so P ratio is not calculated based on only the movement of Nifty. It's not calculated. There is different calculation. I also don't know, but as per my understanding, when Nifty P ratio is giving a sign of entry, we should not miss that. That is the right moment for a investment. That too, say like not a very short term investment, a little bit 3 months of investment. That is the right term for an investment. You mentioned the range of Nifty PE has shifted from 16 to 22 levels in the last 15 years. Any reason why should happen this? See, the reason is, Mr. Bath, Nifty from last 10 years, 2009 Nifty was trading at 4,400. It went till 3,900. The moment when I entered in stock market, it was 3,900 Nifty was trading. Now it is settled with 11,000, 12,000. How can you expect the weighted average to be the same thing? It is nothing but weighted average. Are we clear? This P ratio is nothing but weighted average. Ratio in the sense it's an average of the weighted movement. Clear? So next, can we buy considering P ratio of Nifty for included segments? You can try. Again, if we find Nifty crashing reaching to 22, 24 levels, can we invest in Nifty with Nifty 50 stock which is having more weightage? Yes, you can do that. That is the right work, but the stock also should have been crashed. Clear? When Nifty is reaching here at 22, and if the stock is at here, stock is at the lifetime high, that is not the place to invest. Clear, Kiran? You understood? Stock also should have a substantial crash, and after that it should give a reversal for entry. Technical pass out should come. So once that is happening, based on this evaluation, you can invest in Nifty, you can invest in stocks. So this is the correlation. Next, if you expect downtrend, can we short Nifty future for 2 months? You should have shorted when Nifty was at 30. Are we clear, Mr. Agam? When Nifty was in, how we are expecting to buy Nifty in 22 to 24, same like that, you might have shorted Nifty in at the time of 30 levels when it is completely high. Okay, if the earning also come up with price, the P ratio will decline. Okay, so that is the news Mr. Bajaj has given. P ratio, PE, that is price to earning ratio. So Nifty levels can go up. However, if earnings also come up with P ratio, the P ratio will decline. So that is the inference. Okay, what is approximate duration to have good P ratio? Nothing like that. It can happen in 2 years, it can happen in 1 year, back to back it can come. So Aditya, for stocks that is completely different. I told you no. So we cannot able to tell. Will market crash 1000% and fall 1000 points? No, not sure. It can sustain in the same level itself. And one more doubt, as you mentioned, when Nifty was on 4000, we had an average of 16. Nifty is 3 times now. So that is what Mr. Bajaj told. If price to earning is, if the price is moving with earnings, the price to earning ratio will decline. So that is some technical things. You can just Google it and see how this evaluation is happening. So what I am teaching here is what is the inference of this ratios, what is the inference with this ratios, what is the inference, that is what I am teaching. If I take one lot Nifty for positional, how do you place stop loss? Savitri, that is what I told. You should place stop loss roughly 75 to 100 points against a positional target of 300 to 500 points. So you should have patience to hold for 2-3 months. Number one. Number two, if you are picking, see, this is a rough stop loss and rough target. Say, like for example, if you might have picked at this low level, you can keep this swing low as a stop loss. You don't have to take even 75 points risk. Clear? So once you complete the technical studies, you can correlate both. Will you place stop loss order daily? No, madam. We have to put a price alert, and while the price is getting triggered, we can exit in stop loss. So that also I'll teach you in the later on classes. So now can we move to the next subject? Same thing, related to same thing only, next topic. So what is the, based on the variation, what is the market is giving an opportunity? So let's start that. So now we have seen this data. We have seen this data. Almost there are 2000 entries. So we have converted this as a pivot. We have converted this as a pivot. So here, what we can able to understand here is 0 to 25 range. That means Nifty is moving like this. Very, very narrow levels Nifty is moving. Next, 25 to 50, it's like this. Little bit. This is, I'll tell you, okay. So I don't want to give a graphical representation for everything. You can see here, when Nifty moves 0 to 25, we can tell as a flat or consolidation phase, and there cannot be a loss in this market unless you buy a option. Are we clear? Unless you buy a huge quantity of option, buying option, there is no possibility of this market condition to make a big loss. Number one. Number two, you can see 25 to 50, 50 to 75, 75 to 100, 100 to 125, 125 to even 150. So now if Nifty is moving 1% up, what is that? It's just 150 points. 120 points up, Nifty is 1%. So even if the Nifty is moving up by 120 points or 150 points, we can consider this as a normal phase. Normal phase in the sense stable market. That is what we can assume. We have to arrive. Next, 150 to 170, 175 to 200, 200 to 225, 225 to 250. This is high movement. Risk is involved. At the same time, reward is also involved. If you are in the right direction of the movement, say like market is moving up by 200 points. If you might have bought the stock or nifty at this place, you will make good profits in the rally. If you are against this market, there is a possibility of losing big money if you don't follow stop loss at the stop loss levels. Okay, next. So this is good. I'll tell you, this normal phase is good. High movement is also good. Considerably, we should be in the right direction. We can tell little bit risky, and this is abnormal market. Even as per today's condition, if Nifty is moving up and down, the difference between the high and low, if it is 250 to 275 or 300 points, these all things we will tell as a abnormal market. So if we see the number of days after running this pivot, so what we are trying to arrive is how many days market is giving us opportunity to trade in a stable market. Stable market. Normal phase, out of this 2411 days, normal phase is 2200 days, high movement is 177 days, abnormal movement is 14 days. Abnormal movement is, it will happen without any intimation. I am repeating again, abnormal movements will happen without intimations. Say like surgical strike, like many instances, whatever it may be, some war is declared. So all those things will happen without any intimation. That we consider as a abnormal movement. We are bound to lose money in this kind of movement. You see, the last 10 years it has happened only 14 days. So if this particular day, if you might have lost money, yes, we might have lost money, we have to recover that. Next, high movement, 177 days, approximately 10% of the trading days are having high movement. So we have to keep away from these kind of days. How to keep away? If we are watching these things, keep away from market if there is any movements. RBI monetary policy, what you can do is you can avoid trading on bank nifty, stocks which is related to bank, public limited bank, private bank and financial services. Straight away ignore those stocks on that particular day. Trade in pharma sector, trade in steel sector. So you are avoiding the risk. Next, budget, RBI policy, elections, company results. Company results keep on, it will be coming. So avoid, you have to watch the news to keep away from that stock. Say like for example, for tomorrow trading you have taken ICICI, S Bank, HPCL, ONGC, you have taken these 4 stocks. So tomorrow if you are getting a news, today news in the stock, ONGC, straight away ignore this stock. Don't go that side. Don't try to make money out of news. Again, that's a part of betting only. So don't try to do that. If you avoid these kind of things itself, even you, yes, absolutely, you should avoid quarterly results. That is what I am telling. How do you know that company is going to give good result or bad result? And do you know if result is going to be good, before the result itself the stock will give a big move, sir. That is what we have seen. After the results, many stock have crashed. Okay, so now, so for watching the news, what we are supposed to do is install money control app, free version. There is many paid version is also available in this, no use. And particularly there is something called as power your trade. Don't subscribe this, don't subscribe that. They'll charge you little money only, but they'll give you 75 recommendations in a day. Do you think can you trade with that? 75 recommendations you will get if you subscribe for 1000 rupees. Do you think will it be worth? And the main important thing is you will not get any update on that. The beautiful part in that is you will not get any update on that. to exit. Profit is there, nothing. For 1000 rupees you will get hell number of trades. So don't take that, take a free version. You will get a pop-up alert. So in your Android, iOS, install this app. In between 8:45 to 9 a.m. you will get a push notification. That is pop-up alert. You can check that by scrolling your mobile from top to bottom. You can check. So you'll get a pop-up notification that stock in news or any important news. It will come as a push notification. So in settings, in case if you are restricted some apps, you have to enable, give full freedom for this app. Don't give any restrictions for this app for saving your battery or data. So you have to give full freedom for this app so that it will give you the notifications whenever there is a news. So this is the only news we have to watch. Whichever the stocks is in news, simply keep away from that. Weekly expiry, monthly expiry, I will come, sir. I will come. Okay. So these are the ways to watch news and to keep away from the events of the days which is on events. So the summary is, the conclusion is, you can see here we are getting ample of, when you divide by this, you are getting almost 180 days of a stable market to trade. This is far sufficient. Are we clear? This is far sufficient. See, we can expect only market to be stable. If you go and buy a stock which is already 10% up for the day, do you want this stock to travel 20% on that particular day itself? No, that is your mistake. That is our mistake. If you go and sell the stock which is already 5% down for the day, don't do this. So these are the don'ts. So that we will see later. How to know any events is there or not? So that is what I am telling. You install this application and enable the push notification. Whatever the news is there, company results, board meeting, everything you can see in this particular app itself. Explore, just like browsing WhatsApp or Facebook, you explore this app for half an hour, sir. You can see everything. Clear? So next, 12, there are 12 months in a year. Okay. However, we are expert trader. However, we are expert trader. 2 to 3 months market will take us for a ride. That means there will not be no profit, no loss. There will be a loss. There will be 20% loss also will happen. Sometimes 30% loss also will happen. We have to manage on a yearly basis. We have to manage all those situations. And very important thing is, don't try to learn stock market completely. It will take 200 years. Our one lifetime is not sufficient, sir. Already we might have crossed 30 years, and another 30 years you cannot learn complete stock market. Every day some new research is coming, some new candlestick pattern is coming. You can see here, previously there was only 3 candlestick pattern. Now it is like you can see here, candle, bar, colored bar, line, hollow, mountain, baseline, volume candle, Heikinesi, Kagi, line break, Renko, range bar, point and figure. So it's keep on they are adding. So if you start doing analysis with all those things, you will keep on doing analysis only, you will not make money. And very importantly, you remember this very clearly, sir. If you do research in stock market, your one lifetime will not be sufficient, because when you compare one strategy, the next strategy, you will feel this is far better than the previous strategy. Let me follow this. You will use that for 30 days sincerely. Again, you will come to see something, and again you will feel that this strategy will give much more accuracy than the previous strategy, the previous 2 strategy. So this is how I have spent lot of my time in switching over the strategies without trading. And I know one gentleman who has passed all the exams in stock market, but he has studied only for 15 years in stock market, sir. Maybe if now he has started making money, but 15 years, see how much time he has lost. With arriving one strategy, if you might have started making profits or started making a passive income, along with that, if he might have done his research, that is great. But now he has come to a conclusion. So don't do research in stock market. Learn one strategy, stick to that, start making money. That will be the shortest idea I can able to provide you. Zerodha give alerts for events. Yes, you can depend. Do we get updates, news from any of our Stock Phoenix channel? There is a Stock Phoenix bot is there. I'll post that in the link. All the events which is coming from Money Control, we have linked as an API. It will be pushed there itself. You can watch in the Telegram itself. We will update that. Okay. So let me see what is left out. So this is the ratio. This is the conclusion based on this P ratio. Consistency. This is the, I'll tell you, this is the golden word. This is the golden word which is very, 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 very important. I'll just show you one snapshot. Okay. Just a minute. Just I'm searching for his name. From where I can get best charts. Sir, your charting platform is sufficient, sir. Siraj, sir. Let's make money from now, sir, Mr. Bajaj. See, market is very, very interesting. Do you know why stock market it has not become bankrupt? Do you know why NSE and BSE and exchanges has not become bankrupt? Because every day we are getting new traders. Number one. Number two, everyday market today is not similar like yesterday, sir. Nowhere a chart will be like this. Yesterday it was like this. Today also it was like this. It will never happen like this, sir. So market is interesting. It will be different. So I'll show you the what I mean by consistency is. So this is one of our student. You can see here, batch 6 student. Okay. You can see you should understand what is consistency just by seeing here. Okay. So you can see this November 11, 1900 rupees. November 7, 1000 rupees. 6, 1500 rupees. November 1, how much is that? 1500 rupees. 30th 1300, 29th 2000, 1500, 1600. This is the place. You can see big loss. See here. Don't see the name of the master. Don't follow anyone. That is what I told you yesterday. Is that matching? It's a live example. Next you can see here 1600, 1400, 2000, 3000. You can see this. He is happy with that 1000 to 2000 rupees. He is number two. He is restricting himself. He is restricting himself by trading more and losing the profits. Number three, he is controlling his emotion. Is that right? He is a batch 6 student. His capital is only 30 to 40,000 rupees, and with that he is making at least 12 to 15,000 rupees he is making on a monthly basis. Do you think that is a decent revenue? Yes or no? So that is very, very important. So consistency is very, very important. Be happy with the daily limited profit. Say like for example, if you are having 50,000 rupees, if you get 1500 rupees, take that money and get out of market. Don't do any further research. That is the limit. That is the milk you can extract for that day from that cow. You should remember that cow milk. If you squeeze more, that's all. Cow will die. So consistency is one golden rule. You should not forget that. Trader, do trading. Investor, do investing. If you are a full-time trader, then be in market for full time. That is very, 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 very important. Trader, you make profit, get out of the market. You made profit in the first 1 hour, take the profit, please get out from the trading terminal, close it completely. That is very, very important. That is called as trade discipline. Clear? So don't look for further more opportunity, because your day is met. That is the reason we are expecting, right? That is what we are expecting, profit. So if the profit, if the day is met, you close your day. That is very important. So this session, stock market is the only place. See, this quote I found somewhere. Stock market is the only place where we hesitate to buy the stock when it is available in discount. S Bank was at 40 rupees. Nobody bought. Even I didn't buy. So I repent now. So same thing like that. Don't buy only based on discounts. You have to do technical analysis also. That is very, very important. Clear? So this data is over. So now let's see what is left out in this sheet. So today and tomorrow it will be kind of only basic things. So we have to trade as per trade setup. Nifty is the master for major stocks. I left this. Nifty is the master for major stocks. How Nifty moves, the same direction stock may move. It is not mandatory that that stock also has to move. When Nifty is in positive, Nifty stocks itself may crash. So as we seen in the percentage wise, it is not going to give a big impact. Direction is important. So now understanding the direction of the market. So understanding the direction of the market. So as we discussed yesterday, sitting in Pune, okay, I want to go to Mumbai. If you get into Bangalore bus, so we are traveling in the wrong direction. So understanding the direction, if we know the destination, our destination is to make profit for the day. But which way to travel? This is very, 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 very important. Roughly we can estimate like this: Nifty 0, okay, Nifty for example 0 from here, yesterday's close. So let's keep like yesterday's close, yesterday's close. From here by 9:30 a.m. 9:30 a.m. if Nifty is plus 30 and above, you should consider direction is up. Clear? Nifty is 30 and above, direction is up. If Nifty is minus 20 and below, direction is downtrend. Any doubt till here? I'll come. There are many exclusions. There are many exceptions are there. I'll explain you. So I identifying the trend. Okay. So from yesterday's close, if Nifty from yesterday's close, Nifty is positive plus 30 points and above. Say like for example, Nifty is trading at 50 points. That means direction is up. You should go and buy the stocks. You should go and buy the stocks which is trending upside. You should not go and buy the stocks which is falling down. Clear? Nifty is already plus 50 points or plus 45 points. Stocks will be slowly moving like this. So we should go and buy the stock. Don't buy tomorrow. For buying, we have many conditions that we will see tomorrow. We will see in the coming class. I'm just correlating. When Nifty is positive 50 also, some stocks will be falling down. Don't go and buy the stock. And when Nifty is flat, positive or negative, so we'll take like this, negative 20, and whichever the stocks is falling, go and short the stock. So this is the direction. Next, Nifty yesterday's close. From yesterday's close, that is what I am coming, Santosh. That is what I am coming. From yesterday's close, Nifty is gap up by 100 points positive. Okay, gap up by 100 points positive, and Nifty is flat. Nifty is gap up in the sense already it is gap up, and it is see for 15-20 minutes or see till 10 o'clock. If Nifty could able to manage its high, then you can buy the stocks which is by that time only starts moving upside. By that time only starts moving upside. Since Nifty is 100 points positive, stock is also 5% positive. Don't go and buy. Are we clear? Stock is also 5% positive. Don't go and buy that stock. So that is done. Already the movement has happened. So other case, yesterday's close, Nifty is plus 100. it started falling down. That means it is the opportunity to go for a short. Same like that, look for a stock which is gap up or already it has overvalued, go for a short. So which we have to go for a short, we will see. This is just understanding the direction. Forget about stocks. We are learning about Nifty. From yesterday's close, plus 30 long, minus 20 and below short. If it is plus 100 flat, then you can do nothing. Don't do anything here. So it is indirectionate. We can tell us indirectionate. If it is starting down, go for a short. Same like that, 100 points negative. If it starts reversing, go for a long. So are we clear with the direction? When it is the right time to decide on Nifty direction? 9:30, 9:45, 9:30, 9:45. And sometimes what happen, it will oscillate in between both the sides. It will oscillate in between both the sides. So this time stocks will work. You will think that what Nifty is trading flat, plus 30, minus 20, Nifty is trading flat. At this point of time, the stocks which is going upside, it will silently it will start going upside. Same like that for downtrend. Are we clear? So for S Bank, what are the technical parameter considered to buy? It will be a real example. 100% I will not tell now, sir, because that is the trade setup we are going to learn. If I tell also, it will be very difficult to explain that completely. Clear? So this is over. Now we are going to see what is a share. What is a share? So we have seen more details about Nifty. So now how a company's share is formed. How a company's share is formed. What is a stock, share or script? As I told you, DLF, Reliance, ICICI or ABC company, whatever may be the company. So primarily it should be a public limited company like IRCTC. Everyone knows, right, IRCTC. So we book our train tickets in IRCTC. Long time it was a public limited company. So it should be listed in small medium enterprises. So it should be listed at least in small medium enterprises or mid corporate or big corporate. The minimum criteria is it should be listed as a SME, small medium enterprises or corporate, mid corporate or big corporate. Next, the reason why they list in Indian stock market is they want to acquire public funds for further developments or investments in their assets, infra, business developments, whatever it may be. So that is the reason they are acquiring public funds. Will we borrow money simply? Will we do that? I am running a business which is already profitable. I am getting 5 lakhs every month. Simply will I go and buy 1 crore loan from someone? Or will I simply take 5 partners? No, right? So when they are coming into public limited company, when it comes into Indian stock market, that means they are acquiring public funds to establish their business. So that is the basic understanding. In a simple term, I will explain you because it will be in crores and crores. So let's learn in a very simple way. For example, if the existing company asset value is 1 lakh rupees, if the existing company asset value is 1 lakh rupees and they want 5,000 rupees excess, you can consider that as 1,000 crores and they need 500 crores, 50 crores excess. So like that, for example, the company total valuation is 1 lakh rupees. They need 5,000 rupees excess. That is 5% of the stake or the shares will be given to public as a initial public offer. As an initial public offer. So there will be allotment period of 30 to 45 days. Now it will be 15 to 20 days only since it's a dematerialized one, even the IPO. Previously we have to go and fill the form and give. And there will be a bandwidth will be there. So this stock is listed in between 215 to 315. The minimum lot size. That means you can't buy 2, 3, 5 and all. You can't buy 3025 and all. You should buy in denomination of 25. You can opt for lot size. I want 5 lots. So whoever is bidding the maximum price, again it will run like a lottery system or on a priority basis. They'll be having some quota. So like that they will allot it and they will give the initial shares to the public, which is like IRCTC. So let's see that. You can see here from first day itself it has started going up. It is almost 50% up. It has listed, I am not sure about which price it was listed, but it was absolute profitable. So this is the first day where IRCTC, that is the IPO listed, it is coming as a first stock. This is the first day of this IRCTC stock. Clear? So next is whatever we are trading is called as secondary market. Mohit, IRCTC, I don't have any review because you can see here there is no chart, nothing is there. There is nothing to analyze in this chart. It will take 450 days of chart for me to analyze. At least I need 200 days of the tick. Daily candle I need at least 200 to analyze. So till then no analysis on IRCTC. So next is FPO, follow on public offer. Say like further they want another 20% of the fund more. So what they'll do is they'll give another 20% of the shares to the public, and again they'll acquire funds from the public. So this is how the first stock or the share is getting formed. So a small view, gap up in the sense, if there is a gap up in the stocks, in the sense there is a demand for that stock from the morning pre-market itself. What is pre-market, post-market, we will see. Same like that, if there is a gap down in the stock, there is a gap down in the stock, there is a supply, many members are selling from morning itself. So this is the general view on gap up and gap down. Mr. Bajaj, 200 days in the sense, for me moving average 200 is a very important indicator. So for we need 200 daily candles to arrive that particular stock with 200 moving average. So that is the simple concept. Even we can do this analysis with 5-minute charts, but this will give you more errors. Clear? Can you explain gap up and gap down again? So gap up and gap down in the sense, gap up in the sense from morning, that is from the pre-market itself, there is a huge demand for that stock. For example, there is a news that Yes Bank is going to be, there is some news in the Yes Bank which is very good news. So what happens? From morning itself, everyone will start buying. Members will start, the traders will start putting buy order in the pre-market itself. So what happened when there is a huge demand in the pre-market? So the stocks will give a gap up. Same like that, gap down. How we will know gap up, gap down next day? 100% we will not know, sir. The pre-market time is 9.00 to 9.07. Pre-market timing. So you can see this stock in the pre-market and you can see that. If I know tomorrow this stock is going to be gap up, why will I trade, sir? I'll buy at the end of the day, I'll sell on the next day morning, right? So a few more inputs. See, we are here to become an independent trader, financial freedom. These are the inputs which is we have gone from previous batches. Independent trader, financial freedom, passive income, secondary income, learn about stock market, make wealth, save capital. Save capital is a very important thing, sustaining in market, to stop making losses. These both are very important points. Please remember this. Okay, and learn today whatever we are learning today, and you can recollect tomorrow and practice in live market. So these are the very basic things, not required. We have already discussed. Pre-market, you can see the pre-market update as here, NSE pre-market. So when you click on this, it will show you the pre-market updates, what happened in between 9.00 to 9.07. So what was the change? It will show here. Say for example, in the pre-market today, Yes Bank was 1.5% positive. That means we can expect, still it is not right. We can expect today Yes Bank might have gone up. gone up. Let's see. Yes, it is positive. If you see, if you break down into 5-minute chart and see it is positive. But we can't tell that. Reason is the stocks may give a gap up, but Nifty is crashing completely. Again, the stocks also may bounce back. So these are this is like a blind trade, sir. Just by trading only with the pre-market data is like a blind trade. Say like for example, today first candle is here. You might have bought here. You might have bought here. 71.82. It came 2 rupees down. Your stop loss might have hit. After that, it went 3 points up. So do you make profit here? If you might have hold it till here, that's fine. Or else just by seeing this data, or else just by seeing this chart movement, you should have bought here. Then it is right. You cannot take this criteria as a stock selection. This is mainly used to understand what happens to your positions on the next day. Say like for example, yesterday itself you bought S Bank at this level, 67 rupees you bought, and today it is giving 2%, 3% gap up. You can dispose the stock in the today's opening hours itself. So that is the calculation you can arrive. So are we clear? Any questions? I think we are done with today's session. Basics of stock market we can see tomorrow. So any questions? Any questions? So like we'll try to complete session in 1.5 hours. Maybe after that 5-10 minutes we can have a Q&A session, because 2 hours it will be too lengthy. Okay. Okay, sir. Okay. Any inputs on Bank Nifty? Bank Nifty, what you want, sir? Input on Bank Nifty. Bank Nifty. See, I'll tell you very frankly, we don't teach anything on Bank Nifty. The reason is it is the highest risk instrument. Volatility, VIX is volatility index. We have a subject on that also. We will see that later. Okay. Components of Bank Nifty. So we can see here itself what is the components of Bank Nifty. Why? Because Bank Nifty is a high risk instrument where your money will disappear in no time. So don't practice anything, any new strategies, any new practices. Don't do with Bank Nifty. L&T, see, I don't want to give the stock views now. The reason is like how to say that it should not be idea for buying or selling the stocks. But still I'll tell you, L&T, it's a trade from support. If tomorrow if it is reversing, it can reach up to 1446, and if it is breaking this level, it will come to 1493. It's a strong support here. It's a strong support here, L&T, because we can see a triple support. 1, 2, 3, 3 supports are there. Maybe even if it is not reversing tomorrow, it is having a chance coming till 1395. It may come in till 1395. TFCI, don't ask about stocks. That is what we are going to learn. In a week's time, you can start learning by yourself. You can start analyzing by yourself. No trade in the stock. No trade in the stock. Thank you, Swapil. There are number of stocks. How to know which stock is going up? Aditya, I told you, right? There is a trade setup. So based on the trade setup, we have a screeners. So we can arrive the stocks. We can understand which stock is going to go up. We can understand which stocks is going to go down. We can arrive. We can trade in Bank Nifty also. We have a separate. We don't have a separate strategy for that. Whatever the strategy we are teaching, you can apply that in Bank Nifty also. How do we decide on the stock pick for daily trade? Is it wrong time? Yes, it is still we have a separate session for that, sir. I'll explain you in the every trade setup. I'll explain you how to pick the stocks. Whether Nifty movement is affected by different sectors or move of the sectors. See, that is what we learned, Sudhanshu. If the particular Nifty is positive, if the particular sector is negative, don't enter in that sector. That is how we have to avoid. Don't enter in that sector. Don't trade in that sector. Any stocks in that sector. Vinod, it is strictly recommended to wait till the entire session, because as of now I didn't teach you anything, right? So now while going on the on today classes, you'll be having lot of things to practice. Are we clear? You'll be having lot of things to practice. So don't try to engage yourself in trading. Please avoid trading for the next another 20 days. Nifty is a measure of expectations of how the market will perform. See, it is a update from Mr. Gandharv Bajaj. Nifty is a measure of expectations of how markets will perform. So you can enter that. You can infer that the Nifty is a measure of expectation and how the economic will perform on the basis of the expectations of how the market will perform. Sir, I think there is a repeat question. You can put it in the group, sir. Okay, you can put it in the group so that everyone can read it. So you can continue the further discussion in the group. So good night. Thank you. So we'll see tomorrow evening. Good night.